Okay, hello everyone, my name is Joseph. Our channel is called Ethernet Week, and in today's video we got Stock Sundays 3, so I'm going to be talking about some more things. Let me make my face bigger because I didn't do it from last time. There we go. And in today's video is going to be really opinionative. You know what I mean? There's going to be a lot of fact to it, a lot of just simple drawing conclusions, cause and effect, but they're going to kind of be in my own vibe. And I have a lot of things that I'm basing this off of. It's not just whatever, you know what I mean? But we're gonna get into it. And you may notice I have the SPY up here. I don't have, and also these tabs. I have a lot of things, but no individual stocks. I've screened for them like I normally do, and I didn't find anything. I didn't find anything I like, and so I'm not gonna do anything. I'm not gonna play it. I don't need to play these things if I don't find something I like. So I'm not going to. But one thing I'm going to do is I'm going to kind of explain my thoughts on the market right now, a trade I am in, and I'm planning to be in deeper, and why I'm in it, when I think it'll hit, and why I'm so confident in it. So first thing we're going to do is we're going to look at the SPY as we have it up here, because we see this big old, we're on the daily by the way, but we see this big old wedge here, right? I'll get the technicals off so you can see better. We got this big old wedge, and of course when we break out of it, we could probably at least test 4060, maybe even make new all-time highs depending on the overall macro market condition. That's possible. Why was it not possible? It is possible. It's probable, who knows, but it is possible. So we got this big wedge. I know that a lot of people are watching it, and we actually do have a breakout of it. We saw this little wedge over here, broke out of that, kind of continued up. CPI day came and we rejected it hard, and then PPI came and we really pushed, right? That was kind of what happened. Now we're still breaking out of it, but we have a big indecision candle right here, and these are the things I look at, or I look for at the lows. You understand? This is something that, let me see if I can find, boom, right here, inverted hammer candle at the lows. That's what I like to see. Where's the one? You see here, little dojis, little hammer candles at the lows? Beautiful. Even right here, we didn't get it immediately, and we actually had to endure a lot, but see what I mean? And at the top, we can see it's the opposite. Where's another one? Here, the little indecision candle at the top came down. I'm not really going to look for more. We see a little bit of, here we go. Here we see an inverted hammer candle still towards the top. It's actually kind of a bullish pattern, and we still broke down. Right here's a perfect example, actually. But yeah, these are kind of the things that we look for as reversal traders to try and see what the market will do. I don't like this setup here at all. I really don't. For a number of reasons. We do have this gap down here. Not all gaps need to fill. Most of them do fill. And so not only do I think it just makes sense for the market to retrace a little bit, at least back down to 402, I think it also just makes a lot of sense for us to come back down and fill that gap. You know what I mean? We did have bank earnings, and a lot of them were good, so that's part of the reason why we pushed up. I think the JP Morgan was up like 7% on Friday, but of course we got to see, you know, stocks like Tesla, Apple, Microsoft, Amazon. They're going to report earnings very soon, and those will be really interesting ones to watch. But so let's drop down to the 4 and look at it a little bit. We can really just see how it communicated with this level a lot, and how we pushed, hit a high, came down, and now we are literally just in the middle of that. We really just spent all of Friday to end up where we were on Thursday. That's pretty much all that happened. And so we really just gotta wait and see what the market actually wants to do. Because right now I think that nobody knows how they want to be positioned. That's what it feels like right now to me. Maybe you have a really clear view, but to me it feels like nobody really has a good idea of how they want to be positioned right now. Another thing I look at all the time to figure out when I want to sit on my hands or when I want to trade is the fear and greed index. So right now we're at 67, which is a little high. And what I really like to look at on these are the metrics regarding bonds, because I feel like these are the most trustworthy. Because of course we can see up here the S&P 500 is 125-day moving average like this. Okay, why didn't we bounce here? Why didn't we bounce here? Why didn't we bounce here? You know what I mean? But I feel like, of course, there's that with bonds as well. But I think that it gives us a bigger picture, and so we get something very interesting. We see that the junk bond demand, the yield spread, junk bonds versus investment grade, is showing fear. People want to buy investment grade way more than junk bonds. Nobody wants to take risk. Okay, that makes sense. We also see here safe haven demand, difference in 20-day stock and bond returns, that stocks are outpacing bonds quite a bit. We see stocks outperforming bonds as it goes higher, and bonds outperforming stocks as it goes lower. And this actually correlates really well with highs and lows on the TLT. And so that's one part of it. One part of what I like to look at. I honestly don't even really pay attention to like new 52-week highs and things like that. Put call options maybe. Yeah, this is a little scary as well, the put call options. This is worth paying attention to. But it's really just the put call options and then the two about bonds are the only ones I really pay attention to. And yeah, this is a little scary. Yeah, it's a little low, obviously showing extreme greed, so we're gonna see how it happens. Okay. Next though, we're gonna take a look at the dollar, because actually we're gonna look at the VIX first, because I feel like that'll be quicker. The VIX is below 20, and it did have a really big drop on past few days. Really, we have a nice little downtrend. 3 candles. What is that from top to bottom? What is it, like 8? Nope, it's like 14.5% drop on the VIX in a very short amount of time. Down to 17. Who knows if we start reversing? I don't. But it is at a level where we did reverse to the last time we were here. We see right there. We bounced and at least meandered around here a little bit before we... Wasn't it Silicon Valley? Yeah, before a bank failed, you know what I mean? So take that with a grain of salt. But we can see just a lot of little bounces around this level. We didn't see it happen. Let me get rid of the algo. See it happen at the beginning of 2022. You can see it down here, and then we stayed above it for the whole time until that level down there. But yeah, that's the VIX. VIX is looking It looks like whatever. Going to the dollar. So this one's interesting. This one's really interesting because what would you have if not the dollar? You want to bank in China? You want to bank in Europe? You want to bank in Southeast Asia? In Russia? You want to bank anywhere else in North America? This one's really interesting to me because I don't see like a scenario where this doesn't stay above or doesn't stay at a high level for a long time. It would make sense for this thing to stay around 105 in my head. You know what I mean? Like there's really nothing around that quantitatively, but it also does look like it could be forming a double bottom. It does look like it could be starting to reverse. We're gonna of course have to see the macro and earnings and things like that because that will be the most important part of it. But we do see, get rid of this, you do see a nice engulfing bullish candle right there. So maybe we at least move back up to 103. But we are at that level down there. And we actually did hit it before and see some turbulence. I might as well just throw it on there. There we go, man. Decent level to look at. Maybe we double bottom. Maybe we retest 105. Maybe we break and go to 108. I don't know. But it does look like it's in a scenario to come back up. Now to the play I'm in, and the play that I want to be in a lot more. I'm sorry if you can hear that bus outside my window, but that play's bonds. That play is bonds, right? And actually, I thought I had all the tabs up here, but there's another one I want. We'll get into this in a minute. If you recognize real. If you know this website, then you're about it. Or this specific page on this website, you are about it. But let's get back to the chart. This is the TLT, the tilts. I might call it that, just as a way of saying it, but whatever. This is the 20-year bond ETF from BlackRock. Bottom line, I think this thing is going to 120 at least, right? That's the very simple version of all this. Let me get rid of the algo really quickly. Now, when do I think it'll happen? Because there are a few minute gaps here. And like I said before, not every gap needs to fill, right? We have a gap up here. Okay. Does that mean that, which one will get filled first? Nobody knows. Is there another gap on the way now? Boom, right here. Right, is that considered a gap? Maybe. But there's one right there. There's more at the top. That one didn't get filled all the way. That's not filled. Are we going back up there? Right? So I really like to take gaps on things like this with grains of salt, because these are the gaps that we really have to just. The price action and the macro matters more than the gaps, if that makes sense. I think that's what I think. But so I'm really not tripping too much about these things. Maybe we fill this gap or this gap. Do I think we're going to come back down here? No, I don't. Do I also think that we're going to come back to fill this gap? No, I don't. I don't think that we're going to come that high, but I do think that we're going to come back up to 120. And now why is this? Well, let's take a look. What do I want to show first? I want to show the yield curve first. So, actually, it would make my life really easy to show it to you like this. Okay, let's go to all time. Yes, perfect. Okay, let's take a look at 2008, right? Now time is going forward. Watch the long end of the curve. Watch right here. We're staying above. It's coming down. It's coming down. It's coming down. Little bit. Little by little. Come back up even. All right. And now the bottom end of the yield curve is near zero, and the long end of the curve comes down quite a bit. Bottomed at about, let's pause this. Bottomed at about 2% from 4%. About a high of 5%. Long end of the curve went down to about 2.5%, right? If we take a look at, does 2011 show it? Yeah, 2011 does show it. 2011, 2012, when our credit rating got downgraded. Look at the long end of the curve. About 4 6/5, 6/10, I mean. And we come back down to about, call about 3, 2.5 again. Yeah. And we can see stay around there for a little bit, and then 2015 doesn't show it that great. Now we're at 2018. 2018 doesn't even show it that great, and then we have COVID, and so the long end of the curve comes, the whole curve just comes down a ton before COVID, from 2 to 1. That's still cut in half. Still 50% cut, whether it's from 5 to 2.5, from 2 to 1. You know what I mean? So still pretty crazy. But now, if this is our yield curve now, that's a little ridiculous, right? I don't know how many people are tired of hearing about the yield curve. I'm not, man. I feel like it's not being talked about enough, which makes me think that I should really pay attention to it. Because even, like, what is it at right now? About 4.5, 4.65. maybe 3. Yeah, it's looking like about 4.25. That's what we'll call it, 4.25. Well, that's a little much. But 4.25, 4.25, a little bit more than that. That's more too, but you get the gist. Still gonna come down. That's part of the whole reason. I think that something is gonna happen, and our bond yields are gonna come down a lot. That's really what I think. And again, gotta get another tab up, a little unprepared. Right here, what's our, I don't know if I'm right at, yeah, here we go. Right now we're at about 5% on the Fed funds rate. We got to 5.25 in 2008, and we got to 6.5 in 2000. And the rest beforehand, that's a little, dare I say, a little irrelevant, right? And then we got to 2.5 in 2019, and then we started cutting again. And even that wasn't good. You know what I mean? Even in 2018 or in 2019. Actually, no. Yeah, that's not a good example of it at all. Actually, that's a little weird then. But we see when we come back here, we could call it. What am I gonna say the bottom is May of 07. Right here, right? And then this is also the top of the market, the bottom of the bond market, and we come down quite a bit, and bonds go from the bottom and this ETF about 85 to 119, 120. Right? We see in 2011, credit rating gets downgraded. We go from about the bottom. Actually, the true bottom is about 88. And then in total, we go back to about 130, right? We see something happen in 2015, currency crisis and shit like that. And then 2018 is a big shit show. Then we see everything run up because of COVID. And now we're pretty much back at 2011 levels, right? This is the biggest thing about it for me. It's just simply mean reversion. And I don't care how long this video goes. Simply just mean reversion. You're going to tell me that since 2000, 20-year treasury bonds have gone up 20%. What? You want me to believe that from, what's the actual date? June 30th, 2002. Treasury bonds are up 27%. You're here to tell me that in the past 5 years they're negative? What? You want me to believe that? That's why you want me to believe that from the top. Where are they at from the top? From the top, they hit a low down 50%, and now they're still down 40%. Even then, if they do go to the target, you're gonna tell me they're down 30% from the highs? I'd be willing to sell them, honestly, because I'm at this level. But that's the major thing I'm looking at, is this yield curve, that mean reversion, and the Fed rates, because they're gonna cut at some point, right? So Fed rate, wow, the fact that in my opinion, the fact that they're even pricing in rates staying the same is ridiculous. But target rate, most likely 78% probability that we go up another quarter basis point. Yeah, bonds will probably come down. Yeah, this trade isn't at the perfect entry yet, I think. Let's actually get bonds up here. There it is. But I still think that, oh, I didn't mean to do that. I just wanted it up there. I still think that this is going to be a great play. I still think that this is really worthwhile looking at, because also people are thinking that after this rate cut, are you off your rocker? The people are likely thinking that after this rate hike, they're going to start considering rate cuts. That will send the market down, probably, and the bonds up. What I actually think, because that's basic, you know what I mean? That's like when we look at this a decade from now, it was like, yeah, they cut the rates, market went down, bonds went up. That's basic. But what it'll actually end up looking like is we really realize that rate cuts are going to get priced in and that they're going to happen. Market goes stupid upwards for a little bit. They actually cut rates. Market continues. Totally irrational exuberance. This time's different. And then, you know what I mean? Like, things really happen and bonds really go up. That's my whole thesis about it. So this is the tilt, right? Good levels to buy either now, around 103, around 100, and if it really gets down there, around 95. I don't think it'll get down there. This is a 3x leveraged ETF. Basically the same thing, but if this moves 1%, this moves 3%, and it's a lot cheaper. Also a lot riskier because for TLT to come down to 100, that's a 5% drop. But for this to come down to 7.5, that's a 13% drop, right? So definitely riskier, and definitely still gaps, but there's gaps. It's the same chart as TLT, but just more violent. Like there's still a lot of gaps in it. Yeah, same exact chart as TLT, pretty much, just different prices. Is that a stock split or is that a dividend? Yeah, it is a split. That's odd that they split it up there. Whatever. But yeah, that's the whole thing about it. Of course, be wary of bond splits and stock splits and things like that. It does have a yield, 1.6. So does TLT. Yield is 2 1/3. 2.73 is the yield. So maybe you catch a few dividends when you're waiting for this to hit. Another way you can play this is through IEF. This is 7 to 10 year bonds. If you want to play this, but you want to be diversified, I would have most in longer dated bonds and shorter dated ones. Let me turn it down, go back on just so they stay like that. And turn it off for this one. This one I'm not in yet. I'm in TLT, and this one TLT and TMF. For me to get into IEF, I'd want it to fill that gap because I don't think that's so crazy. That's a what? Yeah, that's a 3% drop, and I could eat it. I could eat that on TLT and TMF. I could even average down. So that's pretty much the level I'd look at for that, and then I'd be pretty happy to just watch these go to the moon. Target for this would be something like even this. Like, there's just so much bang for your buck in the other bonds, because at this price for TLT to go to the 120 target, let's say it's like perfect, it goes right after that. That's about 15% profit, right? But for IEF to go from that perfect entry to up there is 10% profit, right? So it's a little bit less, but that's personal preference kind of thing. That does have a dividend as well, about 2%. There's probably some sort of 3x leveraged thing for this as well. This chart does look a bit prettier because this gap is buying opportunity, not a holy shit level. But of course there's gaps in this one actually it looks pretty. It doesn't really have a gap, but that's whatever. The next thing about this trade is of course the yields, because of course bond yields are inversely correlated. Let's look at the 20 first. The 20-year bond yield looks for this trade because it looks like it's going to hit something overhead and then come down. That's what I'm thinking about this thing. That's honestly my opinion. This is a perfect descending triangle, and I don't think we're going to break out the top of it. I don't. And if you look at other ones, this is the 30-year. Looks pretty much similar. It does have higher lows, but whatever. The 10-year is a little terrifying because this is a flag. You know what I mean? But we have to accept that these things are happening. But whatever, we'll see what happens. I don't think that we're going to break out of it. I really don't. Do you really think that bond yields are going to go back to 4.2. I don't. This is the 5-year. Just looks so volatile. And also another part of this that I think is absolutely mental is the 3-month. This is 2018 or 2019. This is a little nuts, man. They are double what they were in 2019. 3-month bond yields. That is pretty crazy. That's all I think about it. Even when you zoom out this far, you can really see just how ridiculous it is. This is the 1 year. The short end of the curve is it's insane. I think this is the 2-year. Ridiculous. 5% yield on a 2-year bond. I don't think that's gonna happen again. Even look at this 3-year. I just think that the whole thing just is a need for some mean reversion. I think that the yields are a need for some mean reversion, and the bonds are a need for some trend retaking. And that's everything about this trade. This oscillator looks like shit on TLT on the daily, but on the 4-hour it actually looks pretty good, and on the weekly looks whatever, right? Because like we have this one where it comes down and then it comes back up, so like that's a little whatever. Price action on the weekly looks like shit, bearish engulfing, but again, we'll see how this goes. This is a macro flag, so I'm not going to be very worried about it. If anything, it comes lower. That's just an opportunity for me to buy more. The algo that I made on the daily is saying that it's going to go lower, but we'll see what happens. Also, this is an invite-only script. I have no idea if you guys would be interested in buying it. If you are, I can make a separate video on it. If you are a new subscriber to the channel, thank you very much. Someone left a comment on the video last week and said it was great, and they don't know how I don't have more viewers, so thank you very much for that. Very kind. But besides that, I hope you guys learned something about this bond trade. I hope that you now have something to delve into. Hope that if you enjoyed it, you'll consider liking and subscribing. If you have any other requests about videos for me to make, whether it's coding something, financial stuff, if you put stocks in the comment section, I will talk about them. Yeah, it's pretty much it. I just hope I can teach you guys. I should have said this in the beginning of the video, but none of this is financial advice. This whole video was for entertainment purposes only. Do not replicate anything I was talking about. I keep on forgetting to say that in the beginning. But yeah, that is all for this video. I hope you guys enjoyed it, and I'll be back next week, hopefully with some individual stocks, or just with bloodshot eyes about this bond play. Also, one last thing about this. This could take all year, right? This could take all year. It could take 2 years. But do I think it'll happen? Absolutely, I think it's going to happen. So that's the hardest part about macro. It's not figuring out the what, it's figuring out the when. So hope that you guys learned something new. Again, consider subscribing. Comment stuff you want me to talk about. Comment if you would like this algorithm to be public. If you guys could buy this, would you? That's some machine learning and some other technical indicators. I can't make my actual Quant Connect strategy on this, which sucks. If I figure out how to do that, I will. But yeah, I'm gonna stop dragging. Don't copy anything I did in this video. It was not financial advice. It was for entertainment purposes only. I'll see you in the next one. Stay well.